Good morning, all. Welcome to Anand Rathi Morning Commodity and Currency Podcast. Today's market sentiment will be driven in the wait for US PPI and FOMC meeting minutes, the major economic events seen focus for the day. Let's go ahead with precious metal update. Spot gold is still holding on to gains after market takes support from dovish commentary from several Fed members over the past few days on a shift in mindset over the rate outlook. However, focus now remains on Fed meeting minutes and inflation numbers due today and tomorrow, which may again show declining trajectory, while disagreement over further rate hikes in meeting minutes could remain supportive for gold. Overall, prices may continue to trade with mild positive bias for the day ahead of macro cues from US, but with resistance also persists. Technically, gold is trading near its 200 EMA, which is placed at 57,743 level, acting as a resistance. Breakout above this level, we may see some intraday buying. Support is seen around 57,530 and 57,380, while resistance is seen around 57,750 and 58,000. Let's go ahead with energy update. After a volatile start to the week amid renewed geopolitical risk, oil prices eased a bit as supply threats seem to be fading. Oil market now awaits key inventory data wherein all eyes will be on gasoline stockpiles that have risen substantially due to weak seasonal demand. Meanwhile, monthly outlook report from key agencies due this week also remain in focus. Technically, crude oil is stuck in a range. Breakout above 7,230, we may see some intraday bullish movement. Key resistance is seen around 7,225 and 7,352, while support is seen around 7,080 and 6,970. Let's go ahead with base metal. Copper dipped below $8,000 in LME yesterday, but found some dip buying interest below the psychological support level. On a short-term perspective, we look ahead for mild rallies, which can be sold onto as fundamental stays on the negative side. Technically, copper is looking bearish. Sustains below 702. We may see some more downside movement. Support is seen around 702 and 696, while resistance is seen around 708 and 714. On currency front, rupee is likely to trade higher today, around 83.15 to 83.30, as expectation that the US Federal Reserve will not rise interest rates, further diminish demand for the dollar. After the initial jump following the Israel conflict, oil has been more or less quiet, which is good for the rupee. Also, the minutes from FOMC might shed lights on the Fed's surprisingly hawkish guidance at that meeting due today. That's all for today's podcast. Have a successful trading day. Thank you.